Hey, it is Troy Stavros with Cornerstone Realty Associates here in Knoxville, and it is time to go over our monthly market update, looking at all of the data through the end of November as we head into December and the rest of the year. So let's jump in and take a look and see what happened last month in November in the Knoxville and East Tennessee real estate market as a whole. We're going to dive into how the Knoxville single-family market stacks up against the broader East Tennessee region for November of 2025. We're going to look at how it compares to a year earlier, as well as how they compare with each other. What we are seeing is fascinating. Both markets are cooling, but at a different speed. So here's the big picture. Let's start with what they have in common. Both markets have shifted dramatically from the hot sellers market we've known. Inventory is up, homes are sitting longer, and buyers finally have negotiating power. But here's where it gets interesting. Knoxville is cooling much faster than the surrounding region. Let's talk about supply and demand. In Knoxville, inventory shot up 25% year over year. Compare that to East Tennessee's 15% increase. That's a significant difference. And it's not because more sellers are listing. Actually, new listings dropped 8% in Knoxville versus just 2% regionally. What this tells us is homes are simply taking longer to sell in Knoxville. Now let's look at closed sales. East Tennessee held steady, down just 0.3%, basically flat. But Knoxville down 14%. That's a major divergence. Yet pending sales are up in both markets, 18% regionally, 9% in Knoxville. This suggests that buyers are coming back, but they're being much pickier, especially in Knoxville. So there's a price reality check. Here's what sellers need to pay attention to. Knoxville's median sales price dropped 6% year over year to $385,000. The regional median only fell 3% to $365,000. But the really telling story here is in average prices. East Tennessee's average sale price actually went up 4%, suggesting that luxury and high-end sales are still strong outside of Knoxville. Meanwhile, Knoxville's average sale price fell nearly 3%. This means Knoxville's correction is hitting across all price points, not just the middle market. Now, marketing times are changing. Both markets are seeing homes sit longer, but again, the magnitude differs. In Knoxville, the average days on the market jumped 50% to 57 days. The median shot up 83%. Now that's dramatic. Regionally, we're seeing increases as well, 27% for the average and 37% for median, but from a higher baseline. Interestingly, even with these big percentage jumps, Knoxville homes still sell faster in absolute terms, 57 days average versus 71 regionally. But the rate of change tells the real story. So what's driving the differences between Knoxville and the greater region? Well, Knoxville was simply hotter during the boom years, so it has further to fall. The city core attracted intense competition and price growth that's now unwinding faster than the outlying areas. We're also seeing buyer migration. People priced out of Knoxville proper are finding value in the surrounding counties, which helps explain why regional sales volumes held up better. Now, the absorption rate can tell the tale. East Tennessee sits at 4.65 months worth of supply, knocking on the door of a buyer's market. Knoxville's at 3.08 months, still more balanced, but up 26% from last year versus the region's 11% increase. Now, there's a negotiation shift. In both markets, buyers are getting discounts. Sale to original list price ratios have dropped into the mid-90s in Knoxville, meaning buyers are routinely getting 5 to 6% off original asking prices. What does this mean going forward? For buyers, this is the best opportunity we've seen in years, especially in Knoxville, where the correction is sharper. You have choices, time to negotiate, and real pricing power. For sellers, The message is clear, but different by location. In Knoxville, you must price aggressively from day one. The market won't bail out an overpriced listing anymore. And in the broader region, there's slightly more cushion, especially at higher price points, but the days of multiple offers over asking are pretty much gone, unless it is a spectacular property in a spectacular location that is highly sought after. Now, the bottom line is, both markets are normalizing after an unprecedented boom, but Knoxville is leading the correction with bigger inventory gains, steeper price drops, and slower sales. The broader East Tennessee market is cooling more gradually with pockets of continued strength, especially in luxury segments. Now, don't get me wrong, this is not a crash, far from it. It's a rebalancing. And for those who understand these dynamics, there's opportunities on both sides of the transaction. The key is knowing your specific market and pricing accordingly. Let's jump over and look at what the counties are doing in the surrounding area. So when we look at the East Tennessee counties that we look at, Roane County, Knox County, Anderson County, Loudon County, Sevier County, and Blount County. In Roane County, available inventory was up 28.4%. Pending sales were up a whopping 73.7% compared to a year ago. And the median sales price was down 8.01%, coming in at $287,000, with the median sold price per square foot in Roane County coming in at $180 per square foot. Big difference when you look at what it was last month with the card on the left there. Last month, available inventory was up 41%, so we've seen available inventory drop pretty considerably, and we saw a big pending sale number in October as well at 32.2%. So that's 2 straight months of pending sales being up considerably in Roane County. Last month in Roane County, we had median sales price up 3.7% compared to a year ago at $350,000. This month, down considerably, 8% compared to a year ago. You can see some big shifts in Roane County where there aren't huge amounts of homes selling like in Knox County. There is a much smaller pool of homes that we're pulling from as far as that sold and pending data. So a couple big sales can make a big shift in those numbers. So we just need to keep an eye on that. But they are down 8% year over year this month in Roane County. Let's look at Knox County. Available inventory is up 21.9%. Pending sales are up 9%. And the median sales price in Knox County was down 2.99% compared to a year ago, coming in at $390,000. With the median sold price per square foot in Knox County coming in at $227 per square foot. That's 2 months in a row that Knox County's median sales price was down compared to a year ago. So definitely, as we were saying, we are seeing a rebalancing of the market, especially in and around Knoxville, where home prices really jumped up extremely high over the last 5 years. In Anderson County, available inventory is up 31.7%. Pending sales were up 50.9% in Anderson County last month, and the median sales price was basically flat, just up 0.17%, coming in at $350,603, with the median sold price per square foot coming in at $230 per square foot. So when we look at last month, they were down 1.34%, but this month back to flat. So basically pretty even in Anderson County compared to a year ago, but pending sales way up. So definitely seeing a lot more action over the last month for pending sales. In Loudon County, available inventory was up 11.8%. Pending sales were up 31.9%, and the median sales price in Loudon County was up 8.78%, coming in at $570,000, with the median sold price per square foot coming in at $238 per square foot. Big shift month to month in Loudon County. Last month on the left, you could see prices were down 12.52% compared to a year earlier, and this month they bounced back up 8.78% higher than last year. In Sevier County, available inventory was up 7.29%. Pending sales were down 4.93% compared to a year ago. And the median sales price in Sevier County was down 7.04%, coming in at $500,000, with a median sold price per square foot coming in at $291 per square foot. Again, a big difference between last month and this month. In Sevier County, we saw last month an increase of 25% compared to a year ago. This month, we're down 7%. Also a big shift in the median sales price. But again, we're dealing with a lot of variables in Sevier County because we have a lot of investment property purchases there and a big wide range of property prices. So depending on what is selling in that county, it can definitely affect those numbers considerably. In Blount County, available inventory was up 4.8%. Pending sales were up 3.4%. And the median sales price in Blount County was basically even again, 0.10%, coming in at $376,250, bouncing back to basically even when last month they were down 2.46%. So when you look at both of those slides, you can basically see that things are bouncing around. One month they might be down, next month it might be up. There isn't a lot of extreme up and down, but things are staying pretty steady in that middle area. Yes, we're seeing prices come down a little bit in the Knoxville area, but not drastically. So we will keep an eye on this. This is the last report before the end of the year. Our next report will be in January, and we'll be able to take a look and see what happened through the whole year and how the whole year compares to 2024. So all of 2025 versus 2024 and a year-end update. Let's take a quick look at some other Knoxville numbers. We want to look at these charts here. Now, this is going to show us what is happening this week compared to the same time in other years. So the data that we looked at so far was everything up through the end of November. Now, this data is looking right now what is happening as of this week versus this same week years prior. So let's take a quick peek and look at this. So when we look at the median sales price in Knoxville, you can see that this is the first year over the last 5 years that the median sales price is lower this year than it was the year prior. So that's definitely showing us that there is a shift and a rebalancing going. Not a huge difference. You can see over here that last year, the median sales price was, this is showing $386,000 right now for this week. The same week last year was $389,000. So not a big difference, pretty much even, but still, first time that we've seen those prices tick down compared to the year earlier. Let's jump over and look at active listings and see what active listings are doing. When we look at the active listings, you can see that active listings are definitely up considerably compared to the previous years, and they are higher now than they have been at any time over the last 5 years, exceeding pre-pandemic in 2019. So active inventory is higher, offering more options for buyers and obviously more competition for sellers. When we look at the weeks of supply for this week, again, we saw this last month. It is way higher as far as weeks of supply than it has been for any time since 2019. We're at 16 weeks worth of supply, where last year we were at 13. So definitely quite a bit more supply of inventory out there, again, which means more options for buyers, more competition for sellers. When we look at homes sold this week compared to previous years, we are definitely pretty close to the bottom. 2023 was the lowest, but 2025 is coming in second. So not a lot of home sales happening compared to previous years. So we have a lot of inventory and we have not as many home sales, so that's just going to have that inventory continue to increase, and one of the reasons why we have so much inventory on the market right now. How about new listings? How do those compare to previous years? Right now, we've got the most new listings that we've had at this week compared to the other weeks in years prior than any of the other 5 years before. So definitely, or 6 years, I should say. But you have more new listings, you have less home sales, therefore more active inventory, more options for buyers, more competition for sellers. And when there's more competition for sellers, that usually means days on the market are going to increase. And we talked about that earlier. They are increasing. And when we look here, it is definitely higher. This is the highest amount of days on the market when you compare this week to other weeks and years prior, considerably higher. 72 days on the market. The next closest was pre-pandemic at 63. So we're seeing it take the longest to sell right now than it has over the last 6 years. When we look at pending sales are definitely low as well. Again, second lowest compared to 2023. So fewer sales is going to, again, lead to more active inventory, more competition for sellers, more possibilities for buyers. When we look at the sale to list price ratio, this is telling us how much negotiation is happening. You can see that 2025, they're all pretty close, but 2025 is the lowest percentage, which means there is the most negotiation happening right now this week compared to this same week and years prior. There is more being taken off of prices when a negotiation is happening right now than there has in any of the 6 years prior. And why is that? More inventory. So supply and demand, there is a lot more supply and less demand, which we can tell because pending sales were lower than the other years. So anytime there's more supply and less demand, you are going to see home prices moderate, which is what we are seeing. All of this lines up so you can see basically what is happening in the market. It's pretty straightforward and clear what is happening after you see all of this data. Let's just look at one more thing, price drops. How about price drops this week compared to years previous? Well, again, we are seeing the most price drops this week compared to any of the 6 years earlier at this same time of year. So again, just further evidence that things are moderating here in Knoxville and East Tennessee. What about interest rates? Well, we just had the Fed meeting this week and they dropped the Fed interest rate another 0.25%, another quarter point, but that won't automatically or may not even affect what happens to mortgage rates. You can see they did that yesterday and actually interest rates went up today. So today they're at 6.32% on average for a 30-year loan. So still above 6%. We're hoping that we can see this get down below 6%. If that was possible, I think we would see a lot more activity in the market. We would see those pending sales increase even more. We'd see more home sales and might even see some homeowners jump off the sidelines and get back into the market, which could add more inventory. But at the same time, sellers are buyers, so it's adding more buyers to the pool as well. So interest rates are important, but right now they're still hovering right around that 6.3%. Hopefully they'll make a move, but as of right now, they are not. Okay, hopefully that was some good information, gives you a pretty good idea of what is happening here locally. If you have any questions about any of this data, or there's a specific area in Knoxville or East Tennessee that you're looking at and you have questions about that, or maybe you need to know what your house might be worth, don't hesitate to reach out to me. I can help you get an idea on what your home is worth. If you need to get out and look for a property, I can help you with that. Or if you need to get your home sold, I can help you there as well. I hope you are having a great day. This is Troy Stavros with Cornerstone Realty Associates, and we will talk to you soon.